Thanks, Lizan. Good afternoon, everyone. On behalf of Nirmal Bang Institutional Equities, I welcome you all on the 3Q FY18 earnings call of CCL India Products Ltd. We have with us from the management Mr. Srishant, the Managing Director, Mr. Sarma, the CFO of the company, Ms. Sridevi, Company Secretary, and Mr. P.S. Rao from Consultant Company Secretary. So actually, without wasting much time, I'll hand it over to the management for opening remarks, and then we can start with the Q&A session. Over to you, sir.
Thank you, Abhishek. The company has achieved a turnover of 274.39 crores. The EBITDA is 64.86 crores. Profit before tax is 54.59 crores. And the net profit is 40.42 crores for the third quarter. For the 9 months period ended 31st December 2017, the company has achieved a turnover of 820.33 crores. The EBITDA is 170.92 crores. Profit before tax is 139.86 crores. And the net profit is 100.88 crores. As most of you already know, the third quarter of FY 2016-17 is not a like-to-like comparable quarter to note the performance of this year's quarter 3. Reason being, last year there was a plant shutdown for in the second quarter, and quarter 2 contracts were executed in the first and third quarters, making it an exceptional quarter in 2016-17. If you observe quarter 1 and 2 of the current financial year, there's a 23% increase in net profit on a quarter-to-quarter basis and 21% increase when we compare the net profits of Q2 and Q3. This growth will continue in Q4 as well, which will enable us to achieve the projected profitability of 10% and turnover of 15 to 20% growth as well in this financial year. Thank you. Any questions?
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take the first question from the line of Jignesh Kamani from GMO. Please go ahead.
Hi, Srishant.
Hi. Hi, Jignesh.
On the Vietnam front, I think our agglomeration plant got commissioned in the October, so probably for 2 months, I think we got a benefit of a value-added product.
Yes.
So, in that context, what are the margin we reported looks on the higher side. So this kind of margin is sustainable because still, if you take about entire, you can say, benefit was available only for a part of the month.
Yeah, so it's not only sustainable, it will further increase for this quarter.
Sure. So then, in that case, what would be the right margin to look in Vietnam, considering now agglomeration plant is already there?
Actually, so the range that we are looking at right now is sustainable, but one thing you should understand is, again, we have to look at it on a year-to-year basis. If you're looking at it quarter-to-quarter, it's going to be misleading. Sometimes the customer will want delivery in the first quarter, sometimes in the third quarter, sometimes throughout the whole year.
Sure. And on the, have we shifted both our clients from India to Vietnam?
Yes, we have.
So to that extent, India volume has been slightly on the lower side, which probably we might feel in the future.
Yeah, because we intentionally kept it a little lower because in case the customer wants us to execute from India only, we had to keep that option open. So we intentionally kept it a little lower for that quarter.
Sure.
But now that the transition is completed in this particular quarter, that volume will further increase in both India and Vietnam.
Sure. And now what is the utilization level in the Vietnam?
We are almost at peak utilization, and this quarter also will be at peak utilization.
Okay, sure. So any plan to increase from 10,000 to 20,000 now, or first we will focus on the freeze-dried?
Not right now. Initially, we want to focus on freeze-dried, and we are also focusing on better, better product mix from Vietnam.
Sure. Okay. Thanks a lot. I will come in the queue for the follow-up question.
Yeah.
Thank you. Before we take the next question, we would like to remind participants that you may press star and one to ask a question. The next question is on the line of Nitin Gosar from Invesco Mutual Fund. Please go ahead.
Hi, sir. Just wanted to understand the volume growth that we have seen for the quarter, which must have gone by. Is it more coming from the spray, or is it more coming from freeze right now?
The volume actually is increasing more from spray in this particular quarter. The freeze-dried, as we already mentioned earlier, we are operating at peak capacity. So there's no potential possibility of increasing volumes in freeze at this point in time until the new plant comes online.
Okay. And this new plant will be in India? That would be in the second half of next year?
Yeah, Q2 of next financial year.
Perfect. And on margin side, Vietnam has now started looking up. So this would be key for you to report 10% profit growth for the FY18 year?
Yes, it will be.
Okay. And on India, the top line degrowth that we saw, I think you mentioned earlier that the like-to-like quarters are not comparable, and point number two, India didn't see agglomeration volumes. Did I hear it right?
Yes, that's correct. So this, both the reasons what you said is what we had explained, saying that the first reason being last year was exceptional because Q2 orders were executed in Q1 and Q3 of last year. So that's one of the reasons why the profitability also was much higher than last year Q3. The second reason being this agglomeration, we've been telling from the beginning of this financial year itself that as soon as the agglomeration in Vietnam is up and running, we will do the transition of the customers from here to there. We're transitioning them back, basically. And during this transition period, we cannot take a risk of not being able to execute the order if some hiccup comes. So that small quantity, we have kept it as spare capacity in India.
Okay.
And we have enabled the transition. So once it got completed, we started filling that additional capacity as well.
Got it. Thank you.
Yeah.
Thank you. Before we take the next question, we'd like to remind participants that you may press star and want to ask a question. The next question is on the line of Sneha Talreja from Edelweiss. Please go ahead.
Good afternoon, sir. Thanks a lot for taking my question.
Yeah.
Actually, it was more or less pertaining to the guidance that we have given. So I think last quarter we were pretty confident about more than 20% growth on the top line. Is that somewhat revised downwards, or we will still continue to see more than 20% kind of a top line?
So the guidance that we had given, 20%, was on the assumption of the green coffee prices being more or less stable. But in Q3, there was a substantial decline in green coffee prices. So our volume guidance, everything is going to be the same. The same 20% is going to be there. However, the way it gets translated is because the green coffee prices have come down a bit, it will be maybe between 15 to 20%, or maybe 16, 17 to 20% or so.
However, that doesn't impact our volume growth as well as any impact on the margins.
Exactly. There's no impact on margins, nor is there any impact on the volume growth.
Okay. And since we are near to the FY19 also, any guidance for next year as well? Will we continue with a similar strategy of focusing on the volumes and margins may see a kind of, continue to see under pressure?
Okay. So first things first, normally we give the guidance for next year only on the completion of Q4. We don't give any guidance prior to that. But yes, volume growth will be there, but next year, as most of the people already know, we have our freeze-dried unit also, which is going to come online.
Right.
Which means that the volume growth and the profitability also should be better than what it is this year. The exact numbers and projections we'll be giving it only in next quarter.
Okay, sir, got it, sir. So thanks, sir. I'll come back in the queue.
Yeah.
Thank you. We leave the next question from the line of Ritesh Rangwala from Nine Rivers Capital. Please go ahead.
Hi, thanks for taking the question. Just wanted to know on the the forex volatility that one faces. Is there any provisions in your contracts with your customer that shields you from the volatility?
We actually have a back-to-back contract, so we cover the raw material in dollar terms.
Okay.
The raw material itself constitutes about 70% of the product cost.
Right.
And so there's a back-to-back hedge in foreign exchange, volatility.
Got you. Okay. Thanks a lot.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Manoj Gori from Equirus. Please go ahead.
Yeah, thank you for the opportunity, sir. So just wanted to understand what the currently our booking status, because normally we get some idea about the bookings for the next year during the month of December and January.
Yeah, so the bookings have already started for next financial year. We've already covered about 30 to 40% of our capacity for the whole of next financial year. In the next month and a half, I think we'll be covering around 60% of our capacity.
So this includes your freeze-dried capacity, the additional freeze-dried capacity in Chittoor as well?
No, the additional freeze-dried capacity, we still have some time. We don't want to start filling that immediately. We are filling the existing freeze-dried capacity in Dugirala.
Okay, sir. Okay, sir. So from FY19, if we look at, so your freeze-dried coming in, and as you highlighted earlier as well, the margins are likely to remain on the higher side. And also with falling green coffee prices, do we hold any inventory at this moment which we should benefit in the coming quarters?
Actually, no. So what happens is we always book on a contract-to-contract basis. We do not take any risk with respect to green coffee fluctuation. So whatever contracts we have in place, we have covered the coffee to that extent. In fact, speculation is something we don't want to get into because, in fact, if you look at all the reports and world market data, everyone says there's sufficient raw material available, there's sufficient green coffee available, productivity is up. But at the same time, you do have news coming in saying that, there's some shortage somewhere and funds taking position in coffee. So fluctuations can take place at any given point in time. A lot of people expected the green coffee prices to come down from November, not from November, but from actually February onwards. But in reality, the correction started taking place in November itself, which resulted in a decline in turnover. So because of this reason, we don't speculate in green coffee at any given point in time. That's the business model of the company.
Right. So Brazilian and Vietnam crop has been very good. So that could be the key reason for the drop in green coffee prices.
Drop in prices, yes.
Yeah, sir. That's all, sir. Thanks a lot and all the best, sir.
Yeah, thank you.
Thank you. We'll move on to the next question. That is from the line of Rahul Maheshwari from IDBI Asset Management. Please go ahead.
Good afternoon. I have just now in commentary you told that for the capacity which is there, excluding the freeze-dried, it has been booked about 30 to 40% of capacity, and by quarter 4 and you will book 60%. But in quarter 2 concall, you had already told that your 5,000 freeze-dried new capacity which is coming in Chittoor, it is orders have been filled for FY18 and for FY19. It is the 30% of the capacity is booked.
No. The 5,000 tons I was referring to the existing plant. For the new plant, until the plant is actually commissioned and until we actually submit samples to the customers, we cannot sell the coffee. If we commit to something and if there is any delay for any reason, there will be a lot of penalties and other things imposed on us.
So current freeze-dried coffee plant which is there in India, how much does it contribute?
Contribute where? Towards the...
towards the volume, towards the top line, towards the EBITDA.
Approximately around 300 crores or so comes in on the top line from freeze-dried.
Okay. And in volume terms, how much it contributes?
Volume terms, about 6,000 tons is the capacity that we have here.
And it's 100% is being utilized?
Yes.
Okay. And can you talk a bit on your Continental Coffee, which is a retail segment that you had given a target of 80 crores by FY18 you would be striking. Where is the guideline right now?
Yes. So now that we have Praveen on board, he has done a lot of changes in the market. So what he has focused on is revising the current supply chain margins that we are passing on. And he has also, with respect to the offer schemes and the BTL activities, he's done several revisions. What he has done is he has reduced the volume guidance from the 80 crores to around 70 crores. But he has increased the gross margins from about 5 to 8% that we had earlier to closer to 30% now.
So what is the rationale, or can you give more color that what is the strategy that you are taking place, that within one quarter what it made you to go less on the volume front, more on the margin side? Going forward it would be more towards keeping it niche, not a volume-based brand, or what?
Exactly. No, so that's the right question, in fact. So the idea earlier, we were just trying to sell our product as a Me Too product. Just Nestle and HLL are already there with their products in the market, and our products were just another alternative that was available. So we were giving heavy discounts. We were pushing volumes. That is a strategy, what he said, is not sustainable. And the idea is to build a brand. In order to build a brand, you need to create that demand and that pull. For that, you need to change the perception that people have with respect to your products. So that process has been initiated now. And the response also has been really good. We've already started ATL activities in December of last year. And we're continuing the ATL activities even in this year.
Okay, so what can be the guidance by FY18? How much you would be targeting if you have reduced from 70 crores to how much?
To 70 crores, from 80 crores.
From 80 crores.
70 crores, yeah.
Okay, but the margins would be 30%, from 5 to 8% to 30%.
Exactly.
But how big is this market which you want to create a brand? That in India, going for more premiumized coffee kind of thing, generally it is being taken at the, what we call the CCDs and all these outlets which is there. But on a retail front side, at a home consumption, do you think the strategy of consumption of the very premium-based brands is working?
The current records, if you look at, as per the Nielsen's report, the instant coffee market in India is a 1,800 crore market. I'm talking about plain instant coffee sold in retail segment.
Okay.
This excludes data from institutional sales, and it also excludes premixes which are currently being sold, and it also excludes the roasted ground business.
Okay.
If you combine all the segments together, it works out to be almost a 4,000 crore market.
Okay.
So in a 4,000 crore market, we have right now, though we are present in several states, about 80% of the coffee consumption is coming from the South Indian states.
Okay.
Which is why even we are focusing on the South Indian states at this point in time. And without much of advertising or pushing the products, we are seeing an excellent response. So we are hoping that once we start building the brand in a more structured and professional manner, it should grow much faster as well.
And what kind of investments would be taking place for this brand?
Actually, because we've already created a volume base in the last couple of years, there's not much support that is actually required from the Indian company, from our parent company. The exact numbers and guidance we'll be giving towards the end of this Q4 in the next conference call.
Okay. And third question, in last con call, you had told that the number of manufacturers had increased at a global level. So can you give a color on how the US is performing, whether our capacity is just at 2,000 ton right now, which we are giving to the US business as compared to 80,000 ton, which you had mentioned. So can you give color on what is the demand scenario, what is your strategy going on? Because you used to always say that it's a big trigger for us if the one litigation or the US gives the regulation, if the regulation takes place. So can you give on a global level how the scenario is working on a coffee consumption?
Yeah, so if you look at coffee consumption per se, it's still growing at the same 2.5% year on year. But what is interestingly happening across the world is there is a lot of consolidation which is taking place as well. Last year we have seen one of our major competitors / customers being taken over by a big brand. So all the private label business that they had is now getting spread to other companies, and we've taken a large chunk of that business. Now, this year, based on the inquiries that we have been receiving, I can't mention the name, but there is only one manufacturing company which is currently there in the US, which might be in the process of shutting down during the year. So all the customers are looking for alternatives immediately.
Is that manufacturing facility which is going to shut down, it's a big contributing towards US?
It's a major company. So because again, it's because of companies in Asia which have been competing so much with the US and other companies, their costs of productions are higher. They're not growing green coffee. So obviously they won't be able to sustain with respect to the other competitors. So that's one of the reasons why they seem to be in the process of shutting down. So that is the additional capacity that's going to get transferred to other manufacturers across the world.
How big is that capacity? If you don't want to name the company, it's fine, but any out of 80,000 ton, any capacity?
No, around 10,000 tons.
And how are you confident you are to get that chunk of 10,000 tons?
Oh, it's not possible to get the entire 10,000.
I agree, because that much the capacity itself is not there with the company, but incrementally how much you would be targeting?
Yeah, so initially it depends on, there's a huge approval process and all that which we have to follow. There is no number as such that we can give because there are too many factors which are in play, including every single company in the world is after that business. It's not only one customer, it will be say 10, 15 or 20 customers who are currently there with that particular company. Everybody is after them.
But is it that from 2,000 ton next year it can easily be reached to 4,000 ton, doubling the capacity in US?
What 2,000 tons?
The demand which we are catering to.
Currently, yes. For next year from 2,000, there is a possibility of going up to 4,000 or more also. But we are not only dependent on that one particular geography. If we don't get the volume from there, we will be able to get it from other places as well.
Okay. And any update on Switzerland plant? How is, after a person being deployed over there, what is the situation and how things are getting recovered over there?
Yeah, his primary focus has been to add new customers, especially local customers, and he has successfully done that. In fact, in Europe also, there's a little bit of consolidation taking place. So a couple of companies which are reducing operations, in fact, manufacturing operations, they're outsourcing their production to other companies. So they have outsourced to us. So we are getting some new orders in for the Switzerland plant as well.
Okay. On overall,
sorry to interrupt, Mr. Maheshwari.
Okay. Thank you.
Thank you. The next question is on the line of Akhil Parekh from IDBI Capital. Please go ahead.
Hi, Srishant. Questions on this freeze-dried plant. When are we expecting? So you had mentioned that we will be starting this freeze-dried plant by second quarter of FY19. Are we on target for this?
Yes, we are.
Okay. And so one thing in terms of this Continental Coffee brand, which you just mentioned, like we cannot keep on giving discounts, and like we have to work on the branding side.
Yeah.
But just to mention, right, like this month on Amazon, I was seeing buy 2 plus 2 get free on a Continental Coffee brand. So I think it's kind of a dilution of brand. So would you be able to highlight something on that front?
Yeah, that's exactly what we are doing. So what is currently there, the offers and all are slowly being removed now. So it's also being changed. We don't want to drastically change the buy one get one free what is currently there.
Correct.
We don't want to suddenly change that, but we'll be gradually phasing it out. So whatever margins we are seeing right now, the 30% I was talking about is after factoring in this buy one get one free.
Okay.
So once we reduce this, there should be a further improvement, but I think we'll end up using that additional amount for the brand building purposes.
Okay. And when do you expect this phase out to happen?
Immediately.
Okay. And you mentioned that 80% of the instant coffee market, 80% of the coffee market is based out of South India. But if I remember from our last few con calls where you had mentioned, like South India is mainly a filter coffee market, and we don't have filter coffee. So I'm not able to understand like why we are targeting this market when the market is basically purely a filter coffee market.
So South India is not only, yes, it's predominantly a filter coffee market, but the instant coffee sales are also maximum in South India. In North India, if you look at the consumption pattern also, people, the quantity that they consume is say 0.7 grams for a cup of coffee.
Okay.
But in South India, for 1 cup of coffee, they use a minimum of 1.5 to 2 grams.
Okay.
So it's just a slight color change which people in North India are expecting. It's full milk with a little bit of coffee flavor which they're looking for. So the quantity, if you look at value and quantity, North India contributes only to 20% of the entire Indian coffee market. And if you want to really aggressively create a presence in North India, you have to spend that much more, which did not make sense at this point in time. We wanted to establish ourselves where the current instant coffee sales is maximum and the roasted coffee sales are also high.
Okay.
So we will be introducing new brands, including roasted coffee, in the South Indian market.
Okay. And in terms of sales, you mentioned like 1,800 crore for pure instant coffee in retail market in India. And total is 4,000 crore, which includes roasted ground plus the institutional sales.
And
so in terms of volume, would you be able to share like some numbers over here, like how much is tonnage-wise in India, instant coffee market?
Within India, it will be close to maybe 15,000 tons or so.
Okay. This is for pure instant coffee, right?
Yeah. Instant coffee as sold in the form, let it be in the form of premix or in the form of direct institutional sales, or through retail, B2C as well.
Okay, and I assume like we don't have much of market share in this 15,000 ton right now.
Yeah, out of the 15,000 tons, I think maybe around 10% market share we have right now.
Okay, so around 1,500 basically.
Yeah.
Okay. One more thing in terms of guidance, like you had iterated last couple of con calls in terms of bottom line, we should grow around 10 to 15% for FY18, and which doesn't seem to be possible at this moment, given that we are almost flattish on console level for the first 9 months. Would it be a fair assessment to say that we will not be able to reach that 10% kind of growth for FY18 at bottom line level?
Absolutely not. We will definitely reach our target. See, if you look at it, last year, as I was mentioning, is not comparable, but this year would be a comparable year for the future as well. If you look at quarter 1 to quarter 2, we've seen a 20% increase in the bottom line. Quarter 2 to quarter 3 also, there's more than 20% increase. And quarter 3 to quarter 4 also, there will be a similar increase.
Okay, so you are saying on QOQ basis we will see 10% of growth?
Yeah, quarter on quarter we are seeing 20% growth, but on a year-on-year basis there will be at least 10% growth.
For full year FY18?
Yeah, for FY18 compared to for FY17 to FY18 there will be at least a 10% growth in the bottom line as we have guided at the beginning of the year.
Okay.
We are fully on track for that.
So it would be fair to assume fourth quarter should be very strong quarter then?
Yes, it will be.
Okay. And one last question in terms of Vietnam market. What I was reading through, the industry is going through kind of a down cycle. In Vietnam, the growth was around negative 12 to 13%. Can you shed some light in how Vietnam market is shaping up?
See, Vietnam market, our industry is completely different from others. So it's not exactly a fair comparison to make. We are looking at purely on the coffee side. So coffee side, we have our own strategies in place and there's no change in our strategy. One good thing for us is there is, with the new agro plant and everything coming online, we'll also be able to install some maybe small packs and start offering that to customers as well.
Okay.
So our growth potential year on year from now onwards from Vietnam will be quite good.
Okay. Okay. So if I can just squeeze in one more question. For the freeze rate, you said second quarter 19 we should get started. So how much utilization level do we expect? Can we expect around 40-50% of utilization level for FY19 from the new plant?
Yes, you can.
Okay. Okay. All right. Thank you so much.
Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and want to ask a question. The next question is from the line of Sagar Arya from White Oak Capital. Please go ahead.
Hi, sir. Sir, I was just going through some industry reports and I noticed that instant coffee market, most of the growth is coming from developing countries as compared to developed countries. And one of the major reasons for that is that in developed countries you're seeing competition from fresh coffee pods or brewed coffee. What do you make of that? I mean, what's your sense of the instant coffee market going forward with such dynamics in place?
Actually, that is true. There is a lot of competition coming in from roasted coffee, and people are willing to pay a premium for per cup basis. If you get a machine coffee, like a coffee dispensing machine, and then get the coffee, it's costing almost about 80 cents to $1 to make a cup of coffee. If you're talking about instant coffee, it will be less than 10 cents. So there's a huge gap in pricing. If you want to go up the value chain, yes, that is a good option. But there's also a lot of competition in that segment, the roasted coffee segment especially.
Right. But sir, in sense, I mean, the fact that the market is declining, it proves that the consumers are not that price sensitive, right? They care more about...
It's not declining. If you look at the global coffee market, it is growing at the rate of 2.5%.
Right, but how much of that growth is coming from developed markets?
Developed markets, wherever there's a population degrowth taking place, the coffee consumption is remaining the same. The actual additional growth is coming. Like if you want numbers, US is a market that's consuming 85,000 tons. Japan is consuming 35,000 tons. India, which is a growing market, is consuming a maximum of about 15,000 tons. So even if we grow at a space of, say, 10% year on year, it is only about 1,500 tons which is getting added. But in an 85,000 ton market, even if you grow by a fraction of that, you'll achieve a similar absolute volume growth. So it's the base which is much larger in the developing countries, which is also why the volume growth, it appears as if there's not too much of a growth over there. India and China especially, these are the two markets where there is a substantial growth in instant coffee consumption. In China also, you're talking about almost a 20% growth. That's also because Starbucks has come in, they've set up shops, they've gone quite aggressive in the market. And the trickle-down effect is soluble coffee growth is also there in the same market.
So currently, majority of your sales are coming from Europe, right?
No, not at all. We are supplying to now 90 countries, so it's spread across the world. We will never be dependent on any one geography at any given point in time. So there's a lot of volume that we're supplying to Asia, Russia, CIS, Europe, Africa, and North America.
Okay. Also, sir, I just wanted to understand, do you sell your produce to the end consumers directly, or do you go through distributors?
In the domestic market? Or
in the export market.
In the export market. So our customers are, at this point in time, are either brand owners or supermarkets. So the brand owners, they take care of the distribution at their end. The supermarkets, we supply directly to them. They just place it in the supermarket. We also supply large volumes to repackers. Repackers are people who buy in bulk from manufacturers like us and others. They do blending at their end, packing at their end, and they supply to other brands as well.
And how much would repackers account for our total revenues right now?
Maybe around 30 to 40%.
Okay. So the major value addition mostly comes from, I'm guessing, brand owners and when you're selling directly to supermarkets, because that's when you're selling your own blends.
No, it's not our own blends. It's usually the customer's blends that we are selling. And even these repackers, you cannot discount, because usually what happens is when a brand becomes bigger, they won't buy small quantities from a repacker. They would rather go directly to the manufacturer. So there's a lot of business that has gotten transitioned to us in this manner as well. Initially, they build up smaller volumes from the smaller repackers that we are supplying to. In fact, we recommend that if small inquiries come to us, we recommend that they buy from a repacker that we are supplying to in a particular geography, so that their business volume also gets maintained. Our headache gets minimized. We have lesser number of people to deal with. And future, when their volumes grow, when it's justified for them to come to a manufacturer directly, they come to us.
Okay. Sir, I was just going through this article dated 2nd June 2015, which said that toxic effluents from CCL products is impacting the villages around it. Can you please throw some more light on this? What exactly was the issue here, and what steps have we taken to improve the situation?
Okay, so what has happened is, at that point, and in fact this is a question that was asked several times before and we've already answered this, but just to reiterate, our industry is such that our raw material is green coffee and the only other ingredient required to manufacture finished product is water. The water that we use is groundwater. In the instant coffee manufacturing process, you cannot use chemicals at any given point in time because it's a food-grade product. It's only roasting the beans and adding hot water, extracting the liquid, and spray drying it. The effluent that gets generated is basically coffee water. What we do, apart from running it through the EDP, what we further do is that the solid waste is used in the boiler, and the boiler output, the ash that is generated, is sold to brick manufacturers. The water that gets generated, we actually give it to the neighboring farmers. So we always maintain records for the last 20-odd years. If you visit the factory, you will notice in and around the factory area, we've never had a single problem with a single farmer at any given point in time because they specifically request for our water for two reasons. Because of the organic properties which are there, they are getting a better yield than anybody else. The complaints that have come from people who've tried to blackmail us numerous times. Because they do not have any land or any other business interest in and around the factory, they've come and they said, what benefit are we getting? So you pay us some amount, we'll be quiet. Otherwise, we'll give a complaint. We said, do what you want. So the PCB also has investigated. They're fully aware of all this, which is why we're operating normally. We don't have any issues with either the PCB or neighboring farmers. But there will be antisocial elements who will always be there. The fact that they're saying toxic waste, it's unheard of. Anyone can do any research. It's impossible to use any sort of chemicals in instant coffee production, which anyone in the coffee industry can vouch for.
Okay, great. Thanks a lot.
Yeah.
Thank you. The next question is from the line of Anuj Jain from ValueQuest. Please go ahead.
Hello.
Yes, Anuj.
Good afternoon. Thanks for the opportunity. Sridhar, I have a couple of questions. You mentioned in the con call that you have plans to introduce roasted coffee in future. So are we planning to get into filter coffee segment in future?
Yes, we are. So this is a segment that we didn't want, we didn't consider earlier, but Praveen, after doing his research, was saying that there is an opportunity to grow over here as well. So this is largely an unorganized market, and we can offer, like one of the pain points that's currently there in the market is quality consistency. So we have the ability to address that pain point in an efficient manner. So that's one of the reasons why we are seriously going to address this market as well.
And what will be the size of opportunity for this roasted coffee segment?
The roasted coffee, you mean?
Yeah.
The roasted coffee is almost 1,000 crore market.
And also you mentioned that for the domestic business, we are targeting 70 crores of sales. So what would be the breakup between institutional and the branded continental coffee?
So the branded sale will be more than about 50 to 60%, and this includes our institutional supplies in the branded name.
Okay.
Our private label and bulk sales will be around 40%.
Okay. And for both of these segments, the gross margins you mentioned was 30%.
For the average blended, this thing is 30%, all put together.
Okay. So
usually the brand which gives you much higher margins than the other bulk business. So the reason why there will be a further improvement in the subsequent years is because the branded sales are growing almost at the rate of 100% year on year.
And what would be the average realization per kilo for this domestic volumes?
Average realization, I'll just ask a CFO to answer that. What is the average realization for the domestic?
Approximately 500 rupees.
Around 500 rupees per kg.
Okay. Thank you. Thanks a lot and all the best.
Thank you. Before we go to the next question, we would like to remind participants that you may press star and want to ask a question. The next question is from the line of Ankur Shah from Kausar Capital. Please go ahead.
Hi, sir. Good afternoon. So I just have one question on the volume growth. So when you say that the whole coffee market is growing at 2.5-3%, how are we so confident of achieving like 9 to 10 times the market growth rate? Like, what are the drivers? Because essentially, what I understand, it's a processing business which doesn't require a lot of capital, maybe a little bit of entry barriers in the mixtures which you all make. So how are we able to achieve that kind of growth and we are so confident?
So the reason again is it's not only one factor. There are a number of factors that play an important role. First is we've been in the market for a really long period of time, so we have the right partners in each geography. We've developed business over the years, business that has started with small volumes, could have started with 5-10 tons, which has grown to even 2,000-3,000 tons. Okay. So there is business like this which has taken almost 20 years to grow. There are a lot of steps that we have initiated several years ago which is paying off now, and these people will continue to buy from us because we keep the blend confidential. The R&D is 100% ours. We are currently selling almost 1,000 different blends to customers in over 90 countries. Now, all these blends are complete property of CCL. And if anybody wants to replicate it, maybe about 10-20% of the blends can be easily replicated by other manufacturers. But the rest of the blends, you have to invest substantially in R&D to do it. What we have also done is, we have constantly been upgrading our technology in-house. We have the latest, whatever latest changes are taking place, we always keep experimenting with technology, which also enables us to give products to customers before competitors can. Okay. So this is also one of the reasons that customers are confident that if they want any innovation, if they want timely deliveries, if they want trust and confidence, they would rather come to us. There have been instances in the past where, like smaller manufacturers, they've entered into contracts, but when the green coffee price moves, they try to renegotiate. Customers don't like that, which is why everything works on the basis of relationships. The coffee industry itself is so small that literally we will know every single manufacturer, brand owner, or even competitor directly. In fact, we do have regular meets as well, where competitors meet with each other as well.
Okay. So, sir, like, where does the growth come from? Does it come from the existing customer, or the major part of the growth is contributed by new customer acquisition?
It's both, actually. We do get substantial growth from existing customers also, because there's a lot of stickiness which is there in the business. Adding new customers is always a challenge because of the same stickiness that's going to be there with competitors also.
Right.
We usually give a value proposition, or we also give product innovation propositions to enable a customer to shift over to us. If the current supplier is able to give them only 3 or 4 product blends, we will be able to offer them a much wider range, making it more efficient and convenient for them to buy from us.
Okay. So, sir, what is the customer acquisition run rate every year? Like, on an average, how many new customers do we acquire every year?
Usually it will be maybe one or two major customers, and the smaller people can be in the range of even 20 or 30.
Okay. And the existing customers, like just to again think about the market growth, do we get a higher share of the wallet because they are very happy with the products, or they themselves are growing at very high rates?
It's actually a little bit of both. They are growing as well, and what we do is, because we're giving a product which is quality, consistency, all that is there. When the volumes grow, automatically the same margins also get maintained, and the benefit comes to us. Apart from that, offering new products to an existing customer as well. A new product, usually there'll be lower volumes but higher margins because there'll be specialty products.
Okay, thanks, sir. Thanks. All the best.
Yeah.
Thank you. We'll take the next question from the line of Nikhil Upadhyay from Securities Investment Managers. Please go ahead.
Yeah, hi. Thanks for the opportunity, sir.
Yeah.
3 questions. One is on the freeze-dried capacity. Now, as we are closer to getting the capacity commission, and so over the next 3 years, in terms of pricing, and as you said that in earlier comments that the industry is quite small and we know most of the players. So over the next 3 years, do you see any new large capacities coming in other than Tata Coffees? Or so the whole idea is whether the pricing which we are enjoying currently, do you see that to sustain over the next 3 to 5 years?
Actually, the pricing is already under pressure because even Olam has come online with an additional 5,000 tons in Vietnam. And Tata Coffee, I think they're also expecting in the next 3 years to come up with an additional 5,000 tons. The market for freeze-dried also is growing. So one good thing is that even though there is this additional capacity, the market is willing to absorb this capacity. That is the positive thing for us. But because there is additional capacity coming in this year from 2 major companies, the pressure has already started for freeze-dried at this point in time.
Okay.
So whatever margins we are currently maintaining should be sustainable. Like last year's margins were a little bit more on the higher side than what it is from now onwards.
Okay. So, and secondly, so I think at the start of the year and also when I met you, the idea which we had for going for aggressive volume growth, even if it means some pressure on the pricing which we have to take, the whole idea was that we need to pull the capacities, get the customers, and then try to move them higher in terms as so that the freeze-dried, some of the customers can graduate towards freeze-dried and all. So now as the capacity is also coming online and we almost have so as you mentioned in earlier comment that 60 to 70% of our other capacity would also be filled in. For next year, a major margin trigger would be basically the improvement in the pricing from the existing customers which we gave up in this year. Would that be a good understanding, or
no, actually this year what we have done, I think I explained this as well. Q1 and Q2 being the lean quarters, we aggressively priced our products to gain new customers.
Yeah.
And the guidance that I had given also was that in the future it's not likely that one year to the next we can suddenly increase margins with the same customer. It's a gradual process which will take some time.
Okay.
But because we have access to these customers now, it will become that much easier for us to fill the capacity for freeze-dried in next financial year. Okay. So our strategy, as I was mentioning to the previous question as well, What we do, the reason for our growth is not something that happens, within a short period of time. It is a lot to do with planning that takes years for it to materialize. So for next year's plan, we've already initiated the steps in the beginning of this financial year. So the actual dividends will start paying out from next year onwards.
So then effectively, as we come to the end of this financial year, we would have a sufficiently large client base which we can increase the wallet share from them over a period of time.
Yes, and we'll be adding new ones as well.
Yeah.
Like whatever we are doing right now is to focus on that volumes for next year as well.
And secondly, now if I look at over the next 3 years for the company as a whole, now one of the major things which was coming up was this freeze-dried capacity, which probably by next year we would have commissioned, and we would be also in the process of gaining volume. So from here now, does the focus shifts in order to grow the domestic business more aggressively?
There's no shift in focus because the domestic team that has been created, I think I've already mentioned this, now we have a professional CEO. They sit in a separate floor altogether. They have their own team. The team also has been built. So from our side, we don't have to do anything different from what we are currently doing. The idea has always been that, see, the current rate of growth, say, of 15 to 20% year-on-year growth, is sustainable for the parent business for the next couple of years without a problem. That's something which we are quite confident on.
Yeah.
Beyond that, there will be additional contribution coming in from the domestic market. Yeah. So we have given them some breathing space as well. We've said that for the next 3-4 years, you come up with your own strategies to substantially grow volumes within India and maybe in other places as well.
So that was on the management side, but secondly, even if on the capital allocation part, if I look at it, because now we don't have any major large capex as such. So because I think if we need to increase Vietnam from the current capacity, you've always maintained that it won't be a major capital investment as such.
Yes.
So in terms of as you said, in terms of the breathing space, the new management team gets that much time, but also in terms of access to more capital, would that be a proposition which we would be looking at, that probably they get more capital in order to grow the business in terms of distribution and more ATL, BTL activities?
Actually, that was an offer that was made from our side, but the team is quite confident that because that base is already there with them, and since they're already earning good gross margins, they do not require too much support from us at this point in time. We want to ensure that we have a more sustainable growth. We are not looking at coming in a very big way, advertising in a crazy manner, and then hoping that there will be growth. We want that growth to be more organic, which is why it should be a more balanced growth.
Correct.
Which is why we're not telling the team that you have to focus on a, say, 500% increase in market share within 1 year or 2 years. We're telling them you grow in a systematic manner. 100% growth year on year is quite good.
Correct.
So that's what we are asking, the branded business especially.
Okay. And lastly, so basically then to a large extent, the cash generation which we would be having over the next 2 to 3 years, so how do you see the allotment? So one is we would be looking at reducing our debt, but probably parallelly would there be a improvement in the dividend payout, or?
Yes, we are considering that as well. Apart from the repayment of debt, which is going to start maybe a year and a half from now, there will be an improvement in dividend payout as well.
Okay, and just one bookkeeping. So if we have to expand our Vietnam capacity, If I'm not wrong, the number was around 50 crores of capex. Would that be right? Or?
Yes, that's correct.
Okay, sir. Thanks a lot, sir.
Yeah.
Thank you. We'll move on to the next question. That is on the line of Ayush Bhutada from Equitas Investment. Please go ahead.
Hello. Yeah, good afternoon. So my question is, any update on the US situation, the adulteration law?
No, there's no change at this point in time.
No change. And no. Any expectations going further?
Pardon?
Any expectations on that?
No, nothing right now. So that, I think I've mentioned this last couple of times also. We don't know when it will happen.
Yeah.
When it happens, we will inform.
Yeah, but then you were saying that this big manufacturing facility in US has shut down.
That's completely unconnected with it. That's only market forces that is causing that to happen. The plant itself is quite old.
Okay.
So instead of investing substantially in refurbishing or rebuilding the plant, they find it's more efficient to outsource it to other manufacturers.
Okay, so that order that might come to us, that won't get affected because of the law?
No, it won't.
Okay, and what would be the current Robusta coffee prices?
Pardon? What is the current
coffee prices?
Robusta coffee prices?
Yeah.
The OG bulk prices are in the range of about 110 rupees or so. 105 to 110 rupees.
Okay. 105 to 110. Okay.
Yeah.
And any expectations of Robusta production this year? Like, would it be, you had mentioned that there would be a bumper crop in Brazil.
No, so Brazil grows mainly Arabica.
Okay.
So they grow Rio Minas, which is about 90% of their production.
Yeah.
Robusta variant is called Cornilones, and that is less than 10% for them.
So bumper crop is for Arabica, and what about Robusta then?
Robusta also in Vietnam, there is a substantial increase in volumes that's coming in.
Okay.
Though the news is that, there's some issues here and there, but the ground reality is that the crop is quite good.
Crop is quite?
The crop is quite good for this whole year.
Okay. So
the harvest also has just completed, is in the process of being completed now.
Okay.
So everyone is quite happy with the crop.
So prices would remain around the same range than Robusta coffee?
Yes, we are not seeing any sharp increase or decrease.
Okay.
A little bit. I mean, market fluctuations will be there.
Yeah, right.
And unless funds take a position and all that, little bit up and down is likely to be there.
Right. And any new customers added this quarter?
Customers always keep getting added. There'll be usually smaller people who are there. Major customers, usually we are targeting about 1 or 2 customers in a year.
Okay.
And that process is a constant ongoing process.
Okay.
It's not like in one particular month or quarter a customer is added, we're suddenly getting a benefit. It doesn't work that way for us.
Right. So your strategy would still be to, aggressively add new customers?
Yes, definitely.
Same strategy, volume guidance, 20% similar?
Yes. The only thing, bottom line also will be a little more than what we are doing this year.
Right. Okay. Thank you, and all the best.
Yeah, thank you.
Thank you. The next question is on the line of Rahul Maheshwari from IDBI Asset Management. Please go ahead.
Thank you once again for the opportunity. 2 quick questions. First of all, as you said, you have the blends which are being supplied to many countries. So out of the overall top line, can you give what kind of percentage contribution is taking place through this value-added products from you, and going forward, what is your guidance that where you would be taking this value-added so that it can be a margin expansion story kind?
Okay, so specialty coffees will be around, say, 5% of our entire portfolio. Maximum is 5%.
And what is the margins of the specialty coffee?
That will be much higher. It could be maybe even 30-40%.
Okay, and going forward 2 to 3 years down the line, what would be the contribution that you would be targeting to?
Going forward, we're also going to look at small packs and other products, which is currently around 30% of our product portfolio.
Means low unit packs kind. Okay.
Yeah, not only bulk packing, but also jar sachets. We are already doing around 30% of our business as that. We want to focus more on these small packs so that we'll have better value addition.
Okay, and this, but 5% specialty coffee going 2 years down the line, how much it can grow up to, a percentage of entire sales?
Not that much, to be frank, because the coffee industry also, there is a large portion which is value proposition, like you're talking about your pods and all, which are all specialty products, organic, rainforest, these kind of coffees, it's growing, but it's not growing that drastically.
Okay. In India, I'm just continuing the specialty coffee question. In India, the large players like CCL and all the coffee chains which are there, how many such kind of clients are towards your list and how much they contribute?
These kind of companies we supply, like for Coffee Day, we are giving, say, instant coffee. They do their own branding and they're just selling it. But these companies are all roasted ground coffee players, and Coffee Day, they have their own plantations, so they do their own roasting and selling in their coffee shops. So the supply chain itself is completely different.
Okay.
But on the global level, there are several customers who do not have plantations. If they have coffee shops, they procure from companies like us.
Okay. And any plans you would be coming into vending machines?
We already are, actually. We've already started placing vending machines about 6 months ago.
And how's the response and what is the target?
The response is actually really good. We've done something like about 750 machines in the last 6 months, and the target is to do around 3,000 machines in next year.
And what is the profitability kind of thing, and how it can be changing? Though it might not be contributing a very large scale, but how it would be contributing meaningfully towards your strategy?
The main reason for the vending machine business is also the branding aspect. The model that is currently there in India is that you have to give the machines free of cost. You'll recover the cost within 3 to 6 months.
Okay.
So there's not substantial contribution that will come in because of the machines, but there's a good brand presence that gets built up because of the machines.
Okay. And last question, that you told that in the current raw material, 70% of your is the green coffee prices, and they declined during this quarter. What was the reason behind the decline? Sorry if it has been answered, but I could not attend.
The reason for the decline in coffee markets is market forces. So you have, because as you rightly put it at the beginning, your first question was regarding the coffee prices, right?
Yes.
The bumper crop and all that. Because there was an announcement that came up saying that there is a bumper crop in this year. The harvest season starts in November.
And so it lasts to how much period? Means if it is starting from November, to which period it ends up?
To January. November to January is when they do the harvest, but you'll have a clear idea before November itself if the crop is likely to be good or no. So based on that, based on speculation and a lot of other reasons, there was a sharp decline in coffee prices.
But is the crop bumper has taken place during this season?
Pardon?
Has the production been very bumper? What the speculation was being there that due to the bumper crop, the prices got declined.
So ground reality is also the same. There is a bumper crop. There is a lot of availability which is there. And the fortunate good part is that for us it doesn't matter whether the prices go up or down. It really doesn't matter because our business model is not to work on fluctuating prices. We work on a fixed contract basis.
Okay.
So irrespective of the prices going up or down, the only impact might be turnover. which is why turnover will not be a realistic way of judging the performance. It's usually bottom line.
But on domestic front, how much is your contribution to the entire sales, and global? No doubt, global would be higher contribution towards your sale. Any just rough breakup kind of thing?
So I think the guidance itself will give you the numbers. We're talking about 1,100 to 1,150 crores top line for this financial year.
Yes.
And as far as domestic is concerned, around 70 crores or so is what we are looking at.
And the rest is entire global sales?
Yes, global. Exactly.
Okay. Thank you so much for your insights.
Thank you.
Thank you. The next question is from the line of Nitin Gosar from Invesco Mutual Fund. Please go ahead.
So just wanted to understand, you mentioned that there are 2 new facilities which are coming up globally, and the pricing power or the pricing that we used to command on spray and freeze. Now freeze has also come under stress because of this 2 new facility. So does it mean that globally the pricing power on conversion that we are commanding has started to come off?
Not really. At this point in time, whatever numbers or projections we are giving is on the assumption that these capacities will come online. So we were already prepared for this well in advance. So whatever guidance that we are giving also is after factoring in all this.
Oh, a fair point, but there was also understanding that the freeze-dried realizations or the margins that we are seeing, that will continue to hold good.
Yeah.
But right now on call, you mentioned that there is a bit of decline or stress on the realizations and margins that the freeze-dried can offer.
Yeah.
So there is a bit of change which I am trying to understand.
That's right. No, there's no change as such. See, we said that the prices will hold good because there's a huge gap which is there between spray and freeze. And freeze, end of the day, there'll be a couple of percentage points here and there which go up and down, again, depending on a number of market situations. So excess capacity is one of those situations. One of the things we did mention earlier also was last year what we have seen in freeze-dried prices was exceptional because of the demand. That is why we weren't able to cater to the demand, which was the main reason for setting up the new unit in the first place.
Okay. So in past you have been in position to do around 20% EBITDA margins.
Yeah.
On consolidated basis.
Yeah.
Is that the number to go by? Because on 9-month basis you have reported similar kind of number.
Yes, that will actually further improve a bit.
Okay. Okay. So 9-month number that we are seeing right now on percentage margins, that can improve.
That will improve.
So the year to end with, probably the FY18, the numbers that we'll be seeing, that is the number to go by, or it has potential to improve thereafter?
No, it will improve thereafter also because the numbers that you're seeing this year is because we are working with that limited capacity. Next year, once we add additional capacity, you'll see a better utilization taking place. Obviously, the numbers will also further improve because of that.
Okay. And a bit of understanding, if you can help and provide on gap between the realization and the margins between spray and freeze, just an indexation to understand.
To be frank, it will be detrimental for us to get into those details on a conference call.
Fair point, I take it.
Yeah.
Thank you.
Yeah, thank you.
Thank you. Ladies and gentlemen, that is the last question. I now hand the conference over to Mr. Abhishek Navalgund for his closing comments.
Thank you to all the participants and management of CCL Products India Limited for answering all the questions patiently. Over to you, sir, in case we have any closing remarks.
Nothing much. Even I would like to thank all the participants for taking part in this conference call and for asking all the important questions. Thanks again.